With the recent record highs on the US markets and comparative underperformance from pretty much the rest of the world, what are IG clients doing on the trading company's investment platform? Well, joining us today on the IG Trading the Markets podcast is IG Portfolio Manager Sam Dickens. Sam, it's good to be able to catch up with you. Let's ask first about this record run that we've seen recently on Wall Street. The Nasdaq rising to record after record over the summer, and now joined by the S&P 500, just recently tipping over into a new record high for the year. What's driven this rebound?
Hi, Jeremy. You're absolutely correct. Few people would have correctly called the recovery in the S&P 500 over the course of the last 6 months. It's actually to the day yesterday that we've had 6 months since the start of the coronavirus, since it weighed on financial markets. But after falling 33% in US dollar terms, you're absolutely correct. The S&P 500 is back to where it was on February the 19th. We've seen that driven by kind of one major theme, really, and it's the construction of the index compared to other indices around the globe. So just looking at kind of what makes up the S&P 500, tech stocks have a huge weighting in the index, and healthcare stocks do too, compared to the likes of the FTSE 100, where they have a much smaller exposure to technology stocks. And interestingly, things like Apple, as we've all seen, have become a $2 trillion company, which is the same size as Italy's economy, which is just remarkable. And then on the other hand, energy stocks, financials, utilities, real estate, and industrials too have all really suffered heavily since the start of the crisis. And that's based on a large reduction in demand for resources, which has hurt energy companies. And then zero interest rates and a large increase in expected bankruptcies will have damaged bank profitability too. So banks, we've already seen some set aside provisions for increased bad debts.
Having just pretty much completed the earnings for the second quarter, and I know that we were expecting a fairly heavy hit, possibly as much as down as 40% on this time last year, possibly the worst quarter I think we've seen since the great financial crisis. But in fact, as it turned out, things didn't actually end up that badly. Yes, we were down, but not by the margin that some had been fearing. What's been happening since then, and how should we view the markets from here on in, and what should we expect from earnings from companies as we look out from this point?
So earnings have taken a large hit this year, and looking forward to Q3 and Q4, analysts expect them to come in around 20 to 15% down compared to last year. And at the same time, the analysts have been increasing their estimates for earnings for next year too. So at the moment, they're anticipating a 24% increase of earnings compared to what's expected this year, and then another 12% increase in 2022. Now, to sustain the current levels we see at the moment for markets like the S&P 500, it's really important that that earnings growth does materialize. Investment returns are driven by earnings growth, the dividend on the market, and also valuations and expectations for the multiple that investors are happy to pay for that market. Now, over the last 2 years, we've seen increases in the market purely driven by increases in valuations, and there's been very limited earnings growth. So to sustain these higher prices, we really do need to see that earnings growth come through.
You've already mentioned the highlight, I think, for the first half of the year is really tech stocks. A lot of money we know has been going into tech stocks. We've heard just recently that Apple has become the very first properly, fully listed company that's tipped over into the 2 trillion mark. That gives an indication as to where some of the flows are going in the main markets. Let's look at flows on the IG investment platform. What have you been witnessing as the portfolio manager for us here at IG, and what's been happening over the summer?
So on our share dealing platform, we've seen a number of very interesting trends. We've seen a lot of new investors open accounts with us. There's been a long period of time where investors perhaps may have been put off entering the market. So we've had a decade-long run in equity markets where it's been almost there hasn't been that very large opportunity to start investing. So we've seen a lot of new clients open accounts. As you said, the tech stocks have been particularly popular, and clients have enjoyed the rallies that those have seen. Separately, there's been some interesting trends in UK stocks too, where clients have taken advantage of perhaps discounts that a lot of UK blue chip companies are trading at. The likes of Lloyds or BP or Rolls-Royce have been particularly popular. These are, of course, out of favour at the moment, but then valuations compared to the US market for the UK market, as well as European stocks, do look rather appealing at the moment. And then separately interesting, we've seen a very large increase in the number of ETFs as a proportion of total assets on the platform too. So clients aren't just buying individual stocks, but using exchange traded funds to access large segments of the market, such as the S&P 500 or even a basket of commodities. Over the last year or so, we've seen the development of some really interesting thematic ETFs which track a specific trend or sector, and these are particularly becoming popular too.
Sam, I know that IG puts together some standard portfolios which investors can buy into. How have they been performing over the summer?
Yes, you're absolutely right. We've got a range of 5 ready-made portfolios which are backed by BlackRock, which any of our clients can choose to invest in. These range from a purely fixed income and cash-like security portfolio, which targets a yield of around 2% at the moment, up to an aggressive portfolio with around 80% invested in equities. So we've seen a number of changes to the portfolio over the course of the year. In March, on the back of falling equity prices, we increased our weight in equities. And then in June, we decided to take some of that equity risk off the table and increase our investment in gold. And what those decisions have meant is that our performance has been really strong. We track against a benchmark called ARC Private Client Indices. And over the last 12 months, we've outperformed those benchmarks on average by around 7%. Our conservative portfolio is, as I said, purely using fixed income and cash-like securities, and that has a different benchmark, which is based on the LIBOR rate, and that over the period has seen a slight underperformance. But nevertheless, across the portfolios, we've been very pleased with the results there.
To what degree are clients, do you think, now looking for safety and capital protection rather than upside investment opportunity and risk? We're talking there about the record highs that we've seen for these tech stocks on the Nasdaq, and of course in the broader market, the S&P 500 as well. So clearly there are some stocks that are doing very, very well. To what degree are people now thinking this rally's gone as far as it's going to go, and we're now looking just to preserve our capital? Do you think there's an element of that that's going on at the moment in terms of the investment market?
Absolutely, but a lot of our investors will have a longer term view. So by investing in markets which aren't as highly valued, such as UK equities or European equities compared to US stocks, there is that margin of safety as they haven't rallied as much as the UK counterparts. But other asset classes such as bonds or gold, for instance, we've seen a lot of interest in gold being purchased through gold mining shares or through exchange traded commodities. So there are signs that investors are looking to diversify their portfolios at this stage.
Many IG clients trade, of course, as well as invest. Just explain first the difference between trading and investing so we can get a precise angle on how people approach these two methods of trying to make money.
Of course, so I guess the main difference is the time horizon which someone would possibly use the accounts for. For a long-term view, it's probably wise to use a share dealing account or invest in a ready-made portfolio, which you can hold for a long period of time. There's limited costs to that. Normally, you'll pay a small commission to buy a share, an FX fee too, if you're buying overseas stocks. And then if we go to trading, that's to take advantage of much shorter term opportunities in the market and also to access a wider range of markets too. And of course, you can go short on shares using a trading account, which is not possible in a traditional brokerage account.
As you said above, Sam, IG puts together some portfolios, standard portfolios to invest in. But what other investments can customers hold with IG?
So yeah, so those were our IG Smart Portfolios, which people can find out more information on our website and also see those performance figures I talked about. Separately, on our share dealing platform, clients have a good opportunity to invest in a very large range of individual shares. We also offer a big list of exchange traded funds too. That includes exchange traded commodities. And we also offer investment trusts. we offer these assets in a general investment account, or investors can take advantage of tax-free accounts such as an ISA account or a self-invested personal pension account, or a SIPP account.
One final question, Sam, is to what degree is there a relationship between the trading and investment platform at IG?
I think there's a strong relationship between the two types of accounts. I think IG customers have got a really good opportunity to hold longer term investments in a share dealing account or invest in one of our ready made smart portfolios. And at the same time, take advantage of shorter term opportunities through IG's trading platforms. For instance, they could use the trading platform to hedge some of their currency risk, which we described earlier, or go short on thousands of shares that we offer.
Okay, Sam, thanks indeed for joining us. That's Sam Dickens, Portfolio Manager at IG Investments, for today's IG Trading the Markets podcast. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.